this is really, really big. So BYJU'S and Unacademy are rumored, this is just a rumor, take it with a grain of salt, to be in talks right now about a potential merger between Unacademy and BYJU'S subsidiary, Akash. But why would they actually want to do this? Why would BYJU'S want to merge their subsidiary with Unacademy? And why would Unacademy want to merge with Akash? After all, BYJU'S is their biggest competitor. Why would they want to do this? Well, let's take a look at the situation from both sides. So for Unacademy, the motivation is pretty clear. They've got investors and they need to give those investors an exit. So this was Unacademy's shareholding structure as of August of 2021, the time of their last funding round, where they raised $440 million at a $3.44 billion valuation. And you can see here that Unacademy is largely owned by its investors at this point. 15% of the company is owned by the founders, and then 11.8% is owned by employees, and then the rest are investors. That's nearly 3/4 of the business owned by people who are looking for an ROI. So this merger would give them that return on their investment. Also, Unacademy doesn't seem to be doing too hot right now. Their latest funding round was in August of 2021, and we don't have their financials for FY23, but for FY22, their losses went up by over 85%. They've also done 4 rounds of layoffs in the last 12 months, with the most recent being this last Thursday, where they fired 380 people. Okay, so now let's take a look at BYJU'S. And there is an obvious reason here for why they would want to merge Akash with Unacademy, and that's just to knock another chess piece off the board. They eliminate Unacademy from the competition and everything becomes easier for them, right? But there's actually a more complicated reason, and things get really interesting here. See, BYJU'S is not doing well. They've got a rising pile of unpaid loans from customers who have canceled their courses. And this is according to the Morning Context, but what does this actually mean? Well, basically, BYJU'S was selling courses to customers, right? Everybody knows that. But what if some of these customers can't afford to pay for the courses outright? Well, then BYJU'S would offer them the option to pay by EMI. But of course, BYJU'S needs the money right away. They can't wait for all those installments of the EMI. So what they do is they go to a third-party loan provider who issues a loan to the customer. And if the customer pays this loan off smoothly, then everything is fine. The third-party loan provider gets the money plus interest, they keep the interest, and they give the money, the remaining amount, to BYJU'S. But what if the customer cancels? Well, this actually happened a lot because the pandemic ended. Schools opened back up, education went back to the way they used to be for the most part. And so one number put forward by an anonymous source from the Morning Context, and this is an unverified number, by the way, so take it with a grain of salt, is between 40,000 and 50,000 unpaid loans that BYJU'S is currently dealing with, and 10,000 to 15,000 of these loans would be past due by more than 90 days, according to this anonymous source. That is huge, and some of these loans were worth between 77,000 rupees and 3 lakh rupees, according to the article. So let's just imagine right now that you are BYJU'S and some of your customers have decided that they either want to cancel their course, so they're not going to continue paying their EMI, or they can't afford to pay their EMI. What do? Well, you actually owe the third-party loan provider yourself now as a company. And the thing is too that you've already spent that money. And so while in theory you should be paying back the third-party loan provider in full instantaneously, that's your obligation because your customer decided not to pay the EMI and so you have to do it instead. Actually, BYJU'S didn't have that money, and so they couldn't afford to pay all these loans in one fell swoop. Let's just say that these loans are worth an average of 1 lakh rupees. We're just trying to get a ballpark figure here, and there's roughly 50,000 of them. So that's 500 crore rupees in loans, or $60 million, that BYJU'S needs to pay to loan providers. And because they can't afford to pay it outright, after all, they are a loss-making company worth $22 billion in a bear market with no clear exit strategy, investors aren't going to fall for that sunk cost fallacy anymore. And so what BYJU'S has been doing instead is they're paying their customers' EMIs themselves. They've basically transferred the responsibility for these loans and the EMIs on those loans from their customers' hands to their own hands. And that is not a good position to be in. And BYJU'S is really struggling right now. In fact, this is just the tip of the iceberg. There's a lot of things that are going on beneath the surface. Here's that Morning Context article again. Vendor payments are stuck, TDS returns haven't been updated, PF deposits and settlements have been delayed, people who quit haven't been given 1 month's compensation like they were promised, sales teams haven't gotten incentives, people are even worried that March or April salaries will be slashed if BYJU'S isn't able to raise external capital. So will BYJU'S be able to raise external capital? Well, it seems unlikely. Just take a look at this. Here's the recent funding history of BYJU'S. November 8th, 2021, debt financing, $1.2 billion. Then March 11th, 2022, $800 million, led by BYJU'S himself. Then October 17th, 2022, $250 million from QIA, and we can see the decline in round size here. And then just 10 days later, October 27th, 2022, 300 crore rupees in debt from its own subsidiary, Akash. And with all of these rumors, negative PR, and an entire year since BYJU'S last proper venture capital round, I wouldn't be surprised if BYJU'S real valuation is a lot less than that $22 billion number that they raised money from QIA with in October of 2022. In fact, Prosus, which owns 9.67% of BYJU'S, valued their stake at just $578 million in November of 2022, indicating that the true value of BYJU'S is just $5.9 billion, not $22 billion. And that was 4 months ago, so that number could be even lower right now with everything that's been going on. And Harsh Goenka echoed this sentiment when he tweeted, BYJU'S revenue is 2,280 crore rupees, BYJU'S losses are 4,588 crore rupees. That means you give me 1 rupee and I will return 2 rupees. Valuation $22 billion. Number 1 among startups. Nothing is making sense to me. Can someone please explain? And then Kiran Mazumdar-Shaw chimed in and said, valuations just don't stack up, and yet real businesses are undervalued. So all of that to say is that BYJU'S is not in a good spot right now, and so their plan to fix this situation is to take Akash public. They own Akash. Akash has a much better reputation than BYJU'S. It's a trusted brand with over 25 years of history. It's profitable, it's generating lots of revenue, and so they're planning to do an 8,000 crore rupee IPO. That's about $1 billion. But the thing is, we're in a bear market right now, so BYJU'S and their investors need to offer the public more than just Akash. See, from this IPO, Akash is aiming for a valuation of between $3 and $4 billion, and they're expecting to cross revenue of 2,500 crore rupees this year, and so a $3 billion valuation would give them a 10x revenue multiple, which is what they're aiming for. But again, here's the thing, we're in a bear market, so it's going to be really hard for Akash to list at a 10x multiple in this market, especially considering that it's not a digital-first business. And that's where Unacademy comes in. A potential merger with Unacademy would give Akash another 1,400 or 1,500 crore rupees in revenue. And yes, this would be a huge loss. Unacademy would cost Akash a lot of money, but they might be able to figure out a way to navigate this by leveraging capabilities. Now, I'll wrap this news item up by saying again that this is all a rumor. BYJU'S and Akash have actually said that this is not happening outright, and Unacademy has not responded for comment, but it would make sense if it did happen and if these rumors actually turned out to be true, given the situation that BYJU'S and Unacademy are in right now. All right, next up, this video is sponsored by JumpTrade, the leading NFT marketplace on the Polygon network. So JumpTrade has just come out with an exciting NFT car racing game called Radix. And Radix is a metaverse racing game, and by playing this game, you stand a chance to win real cash as a reward daily. All you need to do to play this game is to have an NFT, which you can buy by clicking on the link given in the description down below. But one thing to note here is that these NFTs are going to be dropped on their website on April 5th at 5 p.m. So keep that in mind, as they might be sold out quickly. And again, click on the link in the description down below to check out this game. Now let's move on to the next news item here, because Ashneer Grover has just launched his next startup, CrickPe. Check it out.
CrickPe पे खेलो, यहाँ पैसे फेक बॉट्स नहीं, आप जीतोगे, और परफॉर्मेंस के लिए क्रिकेटर्स भी.
So this is basically another fantasy sports app. You need to spend real money to play, although your first game is free. But I think the thing that a lot of people find interesting about CrickPe is that some of the money actually goes into the pockets of cricketers and associated parties. And I'll get into what those associated parties are in a little bit. But Ashneer has actually raised money for this startup, $5 million. He's raised these funds at a valuation of close to $36 million for his startup, which is called Third Unicorn. That's the parent company here. The brand is CrickPe. And this is a very direct title because his first 2 unicorns were BharatPe and Grofers. So CrickPe is actually aiming to be profitable by the end of this year's IPL season, so basically by the end of May. And one of the big reasons for that is that CrickPe won't be spending heavily on brand campaigns or endorsements the way that a lot of other fantasy sports startups do. Now, let me just break down the business model for you guys real quick. 80% of the prize pool goes back into the pockets of players, gamers. Then you've got 10% being taken by CrickPe as revenue, and then 10% will go into the pockets of cricketers, teams, and BCCI. So breaking down that 10% further, you've got 1.5% going into BCCI's pocket, 1.5% going to participating teams, and then the rest, 7%, will go to cricketers based on their performance. And I'm curious to know what you guys think of this third unicorn startup. Is it actually going to become Ashneer Grover's third unicorn startup or not? Leave a comment down below and let me know what you think. But anyways, let's move on to some more news here. There's a lot to cover, and unfortunately, we can't go into everything in detail. So I'm just going to list off a couple of items in rapid succession here. First of all, I'm not sure how many of you guys heard about the World Startup Convention. It was a massive nightmare where Elon Musk was supposed to be attending, according to the organizers. That, of course, didn't end up happening. It was a complete mess. And if you want to learn more about it, you can find a link to the short that we made about it in the description down below. But also, Oyo is going public, and they've been talking about this for a while now. They were waiting for the right market conditions, and they're probably going to end up slashing their valuation by 2/3, which is a huge amount. But we also saw this with Paytm, where it's usually actually better to undervalue your startup than overvalue your startup at the time of IPO. And then we also have Mamaearth delaying their IPO because of unfavorable market conditions. And then lastly, this is pretty big, GoMechanic has been acquired, although their sale was really, really ugly. GoMechanic's founders had misstated facts, inflated revenue figures, kept investors in the dark, and attempted to raise new funds under false pretenses, and so this acquisition was actually an auction. Basically, GoMechanic's founders and investors were forced to sell the company for parts because originally last year their valuation, their peak valuation was $1.2 billion, but they ended up selling at just $30 million, which is pretty brutal. But anyways, that's all I have for you guys today. Thank you so much for watching this video, and I'll see you in the next one.